Tune in, episode 87. We get into the weeds of what happened in the big, beautiful bill.
You're listening to Between Two Bridges, a business-to-business podcast. With your hosts, Joe Ferranti and Jerry Kenna. Produced by Nathan Kenna. Interviewing entrepreneurs, business operators, and investors. This episode is brought to you by Wash, because laundry shouldn't cost your time. Wash delivers. Sign up at pickupwashdeliver.com. Do the wash. Skip the hassle.
Welcome, Jerry. Episode 87, Between Two Bridges. We're going to call this part 2.
I feel like we've done this before.
Yeah, we in full disclosure, you know that we shoot these behind, So last week we were prepped and we were ready and we shot an awesome video that would have got 1 million likes. However, it was all lies.
Washington, D.C. made us all liars.
Yeah. We never thought in a million years that they would pass the big, beautiful bill in 48 hours.
Yeah. No, I mean, so when we sat down before, the Senate had just passed their version of the bill with some pretty significant changes from the House bill, and they were going through procedural votes that didn't look promising. And it looked like what was going to end up happening was it was going to get kicked back to the House, where they were going to end up having to compromise, come up with a whole new thing, and come up with one bill that they'd be able to vote on.
Which might have been a better system.
It probably would have been better.
Because they really just kind of hoorah'd this one.
Yeah.
And
so they rushed it through because Trump wanted to sign it on July 4th. So he had his big ceremonial signing on July 4th, which was, but basically we left here. I went home, turned the news on, and I'm like, shit.
Yeah.
I think we just did a podcast episode full of just complete
lies. Well, not lies, but just
outdated
speculation.
information.
Yeah, speculation and outdated. Like
it was just no way we were going to be able to release this episode and it be anywhere near relevant, because they're all going to be like, did these guys, are they missing? That's not what happened at all.
Yeah.
But I really didn't think we were actually, he said he wanted it by July 4th, and I was like, yeah, okay.
Well, this administration has proven to get shit done.
Oh, he got shit done.
But anybody that thinks that this is going to help them, let's go through it a little bit.
Yeah, I think that the disappointing part of it is there's a lot of different things in here that are really on the surface and during the campaign speeches. And it wasn't just Trump's campaign speeches. Let's face it, all these people in Congress campaigned on this same shit. On its surface, it was got people really excited, and I think that people are still really excited. I was at a 4th of July party, and everybody's real excited about this one big beautiful bill because it's been pumped up by the media and by Trump and by Republicans in the House and the Senate. It's this groundbreaking thing, and it is. I will tell you, I think this is probably the biggest tax reform bill certainly to be passed in our lifetime. It's definitely even more so than the Tax Cuts and Jobs Act in 2017, probably even in our parents' lifetime. They did a lot, but all the different big headline pieces, once you kind of pull back the scales a little bit, you're like, that's not what I expected it to be.
Right.
So I figured today we'll go through, because it's law. He signed it into law.
And a lot of it dates back to January 1, right?
Yeah. So and it's now. So it's now. So I figured we would kind of we'll do a little bit of a deep dive, and this is a nonpartisan show. Yeah. Because a lot of people give us shit about how we're always Trump supporters or whatever, even though I'm not really a big
I've never even
Trumpy.
worn my MAGA hat on here once.
Yeah.
You know?
I don't even own a MAGA hat.
my wife at times will say to me, "Oh, you're just a Trumper," and I like kind of like it hurts my feelings a little bit.
Yeah, I'm not a blind Trumper. I mean, there's people that are just blind Trumpers, but I feel like I can look at things a little bit more rationally and reasonably and look at this. And like I looked at these things, and like I said, on the surface, there were a couple of them that I'm like, that's really good. And then once I started looking at the fine print, and I'm like, oh, that actually sucks.
Yeah,
like,
a little bit I read through it and trying to pay attention to it, I realized that a lot of these people that are blind Trumpers are going to get mowed down by this bill.
Yeah, I'm not looking forward to this next tax season because I have a feeling that there's going to be a whole political spectrum that are going to be sitting at my desk, like ready to count their money. And I'm going to be like, oh, you
owe money.
It's going to change your tax refund by $100. And they're going to be like, wait, what?
One of the things that I always enjoyed when our Destiny was with us on this show is he really had a grasp of like his taxes, and he said that he would only pay taxes for like till October or something like that because he had it figured out.
Yeah.
Then he would stop because like so many people look at their tax refund as like savings account or like I'll get it on tax day, like when I get this big check, but they don't realize that something like this happens. There might not be a big check, And then you're the bad guy. You're the bearer of bad news.
I'm the bearer of bad news. I hate being the bearer of bad news, but unfortunately, I mean, the numbers are the numbers. And, so I wanted to go through I want to do more of an in-depth analysis. So obviously we're not going to cover everything. Right. There's like something like an 1,100 page bill. I mean, that's
what made it shocking to me that they passed it so fast. Cause
nobody read it.
Yeah. They just went through the bullet points. They got the cliff notes, and
so, I
I
picked just like 4 or 5 different items that I wanted to just, because they're the headline items. They're what everybody's talking about. Everybody's all excited about. And I have a feeling that there's going to be some irritated people, and we're going to maybe get some haters after this one because we're going to burst some bubbles on this episode.
My understanding too is like it's a $6 trillion deficit over like 10 years or something like that.
It's 3.3. Yeah, it may have gone up. Yeah. Last I heard it was 3.3 trillion. It may be 6 now. I don't know. I mean, there's a lot of spending in this bill.
Kids will pay for it, whatever.
Sure.
Their kids will pay for it.
But here's the thing too is, we've talked before, the tax code is designed to manipulate spending. And I think, Trump, I've said it a lot of times, I think there's some people that think Trump's stupid. And I think in reality, I think Trump's playing chess and there's some people playing checkers. And I think a lot of this stuff is not only to manipulate taxpayers into their spending, but there's a lot in here that are going to manipulate manufacturers and big companies to move their production into the United States. And there's going to be some things, we're going to talk about it, but
on the small scale of things I saw in there where they're going to mandate if you have Medicare or you're getting government assistance, you have to work 80 hours a month.
Yeah, they're doing some...
Which is good for small businesses because, sometimes when you need like a half of an employee, you don't want someone that wants to work 40 hours a week. You need someone that can work 10 or 12 hours a week.
Yeah, I think... we're not going to get into those cuts and stuff like that. I think we kind of discussed, being a business and financial, business podcast, we needed to stay kind of in the financial sector. And getting into that, you start going down the political line. And I don't really have the energy for that, for all those hate comments. We're going to get enough after this one anyway. But I think people are going to be surprised on which side of the spectrum are going to be sending us the hate mail this time.
Yeah.
Because this is, we're going to burst some bubbles.
I think everybody's going to, not too many times does something come out like this bill that affects everybody.
Oh, and everybody is going to be affected by this. Yeah. Everybody from your kids all the way to great-grandma.
And the ultra-wealthy and the poor.
Yeah. So. Yeah, everybody's affected, good, bad, and ugly. I think, generally speaking, I think it's going to be a net positive for everybody. I don't think that even in this fine print, anything is going to hurt anybody. I just don't think that it's going to help people
like they think
it is. I think people think that like, oh, I'm a tipped employee, I'm not going to have to pay taxes anymore. And that is very, very far from the truth. And I think people think, oh, I work all this overtime or, and I'm not going to have to pay taxes on any of my overtime anymore. And that's not true. And there's a lot of different things that in the car loan deduction is not nearly as good as what that house even put up.
Yep.
So, I mean, I think that you're going to see some, we're going to go through it.
Yeah. Which one do you want to start with?
Well, we'll start with the good. Okay. So the good is just that the standard deduction, it's a pretty simple, standard deductions are going up across the board. Okay. So base standard deduction for single filers is going to go up $750, $1,500 for married filing joint, and $1,125 for head of household. So those are pretty modest increases. They always go up a little bit every year, not quite that much, and they will continue to go up with inflation after this. But it is giving it a little bit of a shot in the arm. The biggest change to the standard deduction, though, is going to be for seniors. So everybody remembers during the campaign and during all the lead up to this bill, no tax on Social Security, no tax on Social Security. Well, that never made it. Once they actually started putting pen to paper, they realized that, they can't do that. The disappointing thing to me is that I'm not necessarily a believer that Social Security should be just tax-free. You'll get people that'll say, well, I already pay taxes on that. Well, you did and you didn't. You pay taxes on the piece of Social Security you contributed, but your employer's been contributing. They've been matching your whole working career. Yeah. You didn't pay taxes on that.
I just logged into my Social Security because
Yeah.
I'm going to get the real ID and I don't know where I'm so I've paid $250,000 in Social Security.
Yeah.
I'm 42 years old.
Right.
You know, like,
Just imagine, though, if you would have been able to take that $250,000 and put it into a private,
your
own investment account, what that $250,000 would be right now,
Yeah.
and what you'd be on pace to have. It doesn't take much. I mean, you're talking, by the time you're of retirement age with Social Security, instead of getting $3,000 a month, you could be getting $20,000 a month and be a millionaire.
Yeah, because Social Security caps out at $3,877 a month, no matter what you put in.
Right. Yeah. So that's, I don't know. There's obviously Social Security system is broken where, me and you are paying into Social Security because they're having to take our money and pay the seniors that are collecting it now. I mean, they're robbing Peter to pay Paul.
But they do give you that one-time death benefit of $255.
Yeah, I know.
That's huge.
That should help with nothing.
Flowers for the casket.
Maybe a quarter, maybe a down payment on the flowers.
Yeah, right.
I mean, Jesus Christ. So the big change is going to be for seniors. If you're over 65, you get an additional $6,000 on top of your standard deduction. So if you're married and you're both 65, that's a total of $12,000. So just to give you kind of an understanding of what that means, if you're married filing joint, your standard deduction as of 2025 will be $31,500. But if you're a senior citizen, if you're both my husband and wife are over 65, that turns into $43,500. Wow. So what that means is, and the reason why it was kind of the compromise to no tax on Social Security is now that you can have $43,500 worth of income and pay zero taxes. So that was their compromise. That's the big change for the standard deduction. And there's no major fine print with that. There is a phase out where it does start to go down. But I don't think we're going to see much of that. From what I read, about 90% of taxpayers take the standard deduction now, which I don't know if it was in the episode that we're not airing or if it was the one before, but I had said that in my experience, I used to have, before the Tax Cuts and Jobs Act, I would say probably 50-60% of my clients would itemize, and now it's less than 10%. And the article that I read said that 90% of taxpayers now take the standard deduction. So my 10% ballpark was pretty much right on. So I think what the IRS is trying to do, or what the government's trying to do, is they're trying to get more and more people to take the standard deduction. We're going to see additional changes coming, and once some of these things start to expire, you're going to see other stuff. I think they're going to try to just make it so everybody gets a standard. When more and more people take the standard deduction, I mean, it'd be flat out, it's harder and harder to cheat on your taxes.
Right.
Because there's nowhere to put any numbers
I feel like
to cheat.
The more and more you read this, it's they're trying to eliminate a lot of the cheating.
Yeah. Yeah, that's exactly what it is. They're trying to get the leeway out of it. Or they're going to give you, I'm just going to make a pile back there. They're going to give you a couple places that you can cheat, because there's some things that they added in there that are above the line that are going to make it easy to cheat. but the caps are very low.
Yeah.
So they're not going to make a big impact. Where if you were able to itemize in your return, people got out of hand. I mean, I'd have people that would tell me things, and I'm like, really? But all right. So we're gonna dive right into pissing some people off. No tax on tips.
Boom.
They should change that to no cash on cash tips. Remember the tips that you don't actually report to anybody, that you just put in your pocket and we pretend like that didn't happen? Now you don't have to pay taxes on it.
So they want to report it. They want to track it.
Right. So it's really a net zero difference, kinda. So I know that based on the fact that, I know how this operates. I mean, I do taxes for servers, and I'm friends with servers and bartenders, and I know how things operate, okay? They do have to report some of their cash tips, because if not, it does look funny whenever they don't report anything over and above what was a credit card tip. So they are reporting their cash tip. But just to be clear, here's how this is laid out, okay? So, and this was different than the House bill, okay? So the House bill said that you paid zero on your tips. The Senate bill said that it's not zero, it's a $25,000 deduction, and it's considered an above the line deduction, meaning it's not on your you don't have to itemize. Everybody can get it. Single filers have to make less than $150,000 to get the full benefit. Married filing joint have to make less than $300,000. And then if you make over those amounts, you lose some as your income grows, okay? But here's the thing, okay? This is not all your tips. It is just your credit card tips. So if at the end of the night, you received $100 worth of credit card tips and $50 worth of cash tips, if you don't put in the system the $50 worth of cash tips, you just put it in your pocket and you don't report it, then you don't get any of this deduction. The government also doesn't know that $50 exists. So do what you may. I'm not giving you any sort of tax advice, but now we have to, and what's going to be really hard is that this is retroactive to January 1st of 25. So now anybody that may own a payroll company that didn't necessarily track credit card tips and cash tips separately now has to go back to January 1st and figure out to every server that they do payroll for how much was a credit card tip and how much was a cash tip, because credit card tips are fully taxable. The only thing that you can use that $25,000 tax deduction on is cash tips. That's like, talk about bait and switch.
Yeah, because you think about it, who reports the cash anyway, right?
Right. So basically what the government is trying to get you to do is start reporting all of your tips.
Yeah, they want to know.
And then take $25,000 off and pretend like you didn't actually get it, when you people were probably just pretending like you didn't get it to begin with and not claiming any of your tips as it is.
And that's federal, so if you report that you did $20,000 worth of cash tips on your income tax, the state's going to take their share.
Yeah, and so in Pennsylvania we have local taxes, so the locals are going to take it, the state's going to take it. So I don't know if this is as good as what everybody thought. I know that once I started looking at the fine print, I thought, oh boy, that's not what I thought it was.
So technically nothing's going to change for like...
Pretty much nothing's going to change. Now, one of the big arguments that I've heard, and I kind of agree with, and we talked about it before, is that if you've got two employees and one's working at a high-class restaurant and they're making $100,000 a year worth of tips, and you've got this guy over here that's working at Wendy's and he's making $40,000 a year, but he's just making $15 an hour. Why should the guy at Wendy's pay taxes on his $40,000, but the guy working on tips over here not pay any taxes?
Yeah.
So the Senate version initially came out and said, well, we're not going to let you take off all your tips. We're just going to let you take off $25,000. And I'm like, all right, well, that's a little bit more fair. But now, as it turns out, in a world that there are restaurants out that don't even take cash, you can only deduct the $25,000 against the cash tips, not credit card tips. So really, this deduction is not going to probably amount to anything for the vast majority of taxpayers.
That, my friends, is how the government operates.
Yeah. So remember how excited you were about no cash on tips, no tax on tips?
Put it on the floor.
Yeah, it's not as good as we thought.
Thank you for listening. And now a brief word from our sponsor. You've got a full plate. Kids, meetings, workouts, side hustles. There's better things to do than laundry. Introducing Wash, laundry reimagined for the modern world. Schedule your pickup in seconds via the convenient web app. Wash picks up your clothes, cleans with care, and brings them back fresh and ready to wear. But it's more than garments. From bedding and table linens to shoes, hats, purses, and more. Wash handles all your life's fabric, leaving you more time to do you. Visit pickupwashdeliver.com and see how convenient it can be to do the wash. And now, back to the show.
No tax on overtime. This is another one that I think people are going to be a little disappointed in. So, when I talk to most people about the no tax on overtime when it first came out, let's talk about how you collect your overtime. Okay, so Department of Labor kind of mandates this. If you work 40 hours a week, you get straight time. If you work 50 hours a week, you get 40 hours straight time, 10 hours at time and a half, right? So most people assumed when they said no tax on overtime is that extra 10 hours would be tax-free. And then the question was, well, is it federally tax-free, Social Security and Medicare tax-free, state tax-free? How's this going to work? And that's where everybody was questioning. What they should have been questioning is that, well, yeah, no, that's not the case at all. So you're still going to pay taxes on 50 hours worth of work. The tax-free portion is the extra half. So you get paid time and a half. Time, the hour, is still taxable. The extra half time in premium pay, that's what is considered tax-free. Now, and it's still, we have caps, we have income thresholds. So if you're single, you can deduct $12,500 a year worth of overtime pay. That's just the half. If you're married filing joint, it's $25,000. Okay. If you are single and your income, the phase out starts just like the tips, $150,000, $300,000 if you're married filing joint. And then as your income goes up, you start to lose that $12,500 or $25,000, that cap just starts to decrease as your income goes up. So a lot of these things we talked about, it's the whole idea of him playing chess, right? Why? Why did they do this? Because there's always an underlying reason why. So like the tips, now people have to report their cash, right?
Right.
The article I read said that the government is hoping that it will encourage compliance with overtime pay reporting. So I have to think that there is some sort of move here to try to get companies to either they're not reporting their overtime correctly, or they're paying people salary and they should be hourly, or they're hourly and they should be salary. I think that there may be some sort of underlying issue that maybe the government is trying to work out, and that's why they're doing this. I feel like every single thing here, there's an underlying purpose.
Yeah.
That is not just to
help
give
the
you some
American
tax-free income. Just to give you an idea, this one is probably going to, has the potential to probably give you the most benefit. You know, if you're in the 22% tax bracket and you've got $12,000 or $25,000 worth of overtime, legitimate overtime throughout the year in that half, I mean, that could be a pretty sizable amount of money that's going to be taxed against your taxes. If you qualify, this could end up actually being a sizable deduction. Now, this will not come off your pay stub from what I understand. Like, your paycheck is still going to tax it like it's regular income. This is going to be something that's done on your tax return so that it doesn't put the burden of trying to figure out who qualifies for what on the payroll companies and your employer. This is just going to be done at tax time. So
is there a way for, as an employer, to adjust the way you pay people? Take someone's salary and you lower their rate?
I think you're going to end up with issues because there's always been issues with taking somebody that's hourly and making them salary, or salary and making them hourly, because you have to be able to substantiate the reason why you did that. And it can't just be so I don't have to pay you overtime. or, you know, it can be that like I need you to be available off hours, and, you know, so I'm going to give you the flexibility to be able to take a day off when I need you and still pay you, but I'm going to may need you to work some extra hours on this day. Yeah. So there could be logistical reasons, but you have to be very careful with labor laws, just bouncing people back and forth between hourly and salary.
Yeah, because I was thinking if you took someone that was salary, let's just say they make $2,000, and you were to say, okay, now I'm going to pay them 40 hours at $10 an hour. I'm going to give them 30 hours of overtime and they're going to get that tax benefit at the end of the year.
Yeah. I think there's going to be people that play the games with this. The tips, they were actually very specific with the type of occupations that qualify. You have to be a server, bartender, hairdresser, nail tech, things that are typically tipped out employees. They did say who qualifies and things like that, but it's pretty loose as far as overtime goes. I don't know. There hasn't been a whole lot of guidance on whether or not it's just going to be the standard FLSA required time and a half. You know, a lot of employers, if you work a Sunday overtime, it'll be double time or double time and a half. There's not a lot of guidance on whether or not the double time or double time and a half is going to qualify, but we'll have to cross that bridge because this again is retroactive to January 1st. So this is going to be a big deal. This one's probably not going to be quite as disappointing. I think that although I think people were expecting that time and a half to be deduction, not just the half. So it's just going to be less dollars that's going to be deductible. Auto loan interest. This one was shocking because this was actually last time we talked. This was probably my favorite one. Yeah. Because I think that this one has so many underlying benefits to the economy, to
moving jobs,
employment, so much, right? Because the way I was looking at it is it's manipulating not only the taxpayer into going out and maybe buying a new car and borrowing money, which stimulates the economy, but it's also going to make manufacturers, you know, look at the big three in the United States that, you know, GM, Chrysler, and Ford, that for the last several decades have been pushing production into Canada and Mexico. They have to take a long look about whether to pull them back into the U.S. And then you've got companies like Volkswagen that does a lot of Audis and Porsches and stuff still in Germany, that as soon as Trump started talking about tariffs and eliminating the EV credits and then bringing something like this on, they decided that a plant that they had earmarked for EV, they were going to start building Porsches and Audis for the U.S. market.
Right.
So that brings jobs here. That puts people to work here. That makes more manufacturing here in the United States. So those are all good things, right? I still think that a lot of those underlying things are the purpose for this bill. It isn't to give you some tax-free income or to help discount your new Tahoe. But I think that people are going to be disappointed when they find out just how little this is going to actually impact your tax return. Okay. So whenever the House did it, it was when the House version of this bill capped your annual interest deduction at $10,000. And $10,000 in interest on a vehicle is a pretty good bit of money. I mean, that could be multiple vehicles, you know, and then the other nice thing is it could be multiple, all kinds of different kinds of vehicles. It could be a motorcycle. It can be a trailer. It can be, you know, it could be a lot of different things. Now, keep in mind, this is for individual use because any business owner is going to be able to write this shit off anyway, regardless of where it was manufactured, anything like that. So the Senate version, they decided $10,000, that's too much. And then they decided to make it more complicated. So they put on here that it's limited to the interest on loan amounts of up to $12,000 annually. So I read that and I thought, well, what does that mean? Does that mean that my principal payment can only be $12,000 a year? Or does my loan have to be $12,000? What the fuck am I going to buy with $12,000? So I did some further digging, and what this means is that you go out and you decide, well, we were going to look at an Audi, but we want this deduction, so we're going to look at a Tahoe instead. So you and your wife go out, you buy a brand new Tahoe, you spend $80,000. You borrow $80,000 because you're going to get a Trump tax deduction. But you can only write off the interest on $12,000 of that loan. So if you have a 6% interest rate on your $80,000 and you're paying, let's just do the math, Okay. You got an $80,000 loan, and I'm just doing ballpark. That's about $4,800 worth of interest in the first year. Ballpark. Okay. I mean, it's compounding it, but that's very simple. You can't take a $4,800 deduction for that car. You are capped at $720.
Nice.
But that's not a credit. That's a deduction. So basically, if you make $100,000 a year, now you have to pay taxes on $99,240. So I mean, it's at 22% tax.
So it's not going to adjust the spending.
It's $720 at a 22% tax rate. That's literally that $80,000 car is going to save you $158 a year in taxes.
So people will just continue to buy whatever the fuck car they want. They don't care where.
If they read into this bill, or they're going to all rush out and they're going to spend $80,000 on Tahoes, they're going to come see me and go, "Wait, I got $158 for that?" Yeah. So it's
doesn't sound big to me.
Another situation where it was way overpromised and they way underdelivered here.
Yeah.
Whether or not it actually works, I think that if once people realize how little this is actually going to impact their taxes, I have a feeling that it's not going to make the big impact to the economy that it could have. And this sucks.
You still buying a Tesla?
Fuck no. They got rid of the EV credits. That's the other thing we should talk about. I didn't print it out. But the EV credits, if you are in the market for an electric vehicle, you can still get the EV credit if you take delivery of that vehicle before September 30th of 25.
Okay.
The Senate moved the date to September 30th. If you buy that car on October 1st, you're not getting shit. So September 30th, 2025 is the deadline for the $7,500 tax credit for an electric vehicle. So if you're thinking about it, you better get off your ass. You better go start shopping, because that credit is going bye-bye and I don't see it coming back. So we can end this discussion on a good note.
Okay.
For the business owners out here that are listening and thinking, wow, this all sucks. One of the best things that came out of the Tax Cuts and Jobs Act was the 100% bonus depreciation allowance. The Tax Cuts and Jobs Act, it was 100% for several years, and then it started to phase out, and it would drop 20% every year, and eventually it was going to go to zero. The One Big Beautiful Bill puts it back up to 100% and made it permanent for most things, except for aircraft. Aircraft, there's an expiration date. But the asset that you purchase has to be purchased after January 19th of 2025, the day before Inauguration Day. And basically it allows business owners to write off up to 100% of the purchase of an asset, whether it's a vehicle, piece of equipment, improvements to a property, as long as the depreciable life is 20 years or less. There's a lot of different assets. You should talk to your accountant to see what exactly you can do, but you can write off up to 100% of the asset in the first year, which is great because it allowed business owners to kind of level off their tax liability, right? So as you know, in business, it's not always just a sharp incline. Things aren't always great.
Right.
It's an up and down roller coaster, and you could have a year where you have a huge tax liability, and then the next year when it's time to pay that tax liability, your sales are in the shit and you don't have the money to pay the taxes. A bonus depreciation allowance allows you to purchase on those good years before the end of the year. You can't do it retroactively, but before the end of the year, you can go out and purchase a piece of equipment, a truck, do some improvements to your building or whatever, and take up to 100% of that cost and write it off and bring that tax liability down. So it allowed business owners to use that allowance to just kind of level off their liability. And we used it a ton for my clients, because you could, go out and buy a new truck, and now all of a sudden that huge profit that you had, we can use that truck, write off 100% of it, take your profit back down, and pay almost nothing in taxes. And then when you're using something like a truck or a piece of equipment that they offer financing for, especially when rates are low, if you can get close to 0% financing, you're still going to be making payments on that truck even after you've written the whole thing off, but you're not actually coming out with the money. So you get to keep your cash, take the deduction, save the taxes, and you're going into the next year with all that cash, and you can maybe weather that storm of a down year.
Right.
So you can use this to help level off things. So this is back. It's not phasing out like it did before. This is really, really good for small business. This is going to be very beneficial. Probably one of the better things to come out of the One Big Beautiful Bill.
And that's forever.
As of right now, so
no
it's extended through, the bonus depreciation was restored, made permanent for property placed in service after January 1925. But then it goes on to say it's extended through December 31st, 29, and through 2030 and 2031 for long production or aircraft property. So there are some stipulations, some things that are going to phase out, but for the most part, the bonus depreciation is going to stand permanently. Right. So that's exciting. This is a good thing. Finally, we got something good about the One Big Beautiful Bill. There's going to be more that comes out. Obviously, we're talking days old here, and it's 1,100 pages, so the people that are voting on it didn't even read the goddamn thing.
I saw that they're funding ICE $30 billion, which makes it the 14th largest military installment in the world.
They spent a lot of money on military. There was, I guess the idea of this One Big Beautiful Bill, was that it allowed the government to put as much stuff into here because I guess it was easier to get the votes if it was all in this one bill than to try to do it all separately. I don't know. I hate that.
Seems to be what the government always has done. It's they put riders on everything.
Yeah, they always try to pump their own shit up and we'll stick this in there too because they're not going to vote no because we need this stuff.
Well, and especially in this thing, they were going state by state and putting shit in it to get people to vote for it.
Right. So, yeah, they were. So I don't know. We're going to see how it plays out. I mean, this is going to be, I'm going to be putting out some videos on my TikTok and stuff like that to go into a little bit more deep dive on some of this stuff and the good, the bad, the ugly on some of this shit. So
where can they find that?
We're going to put it on Jerry.Kenna on TikTok. We'll put it on my Facebook, Jerry Kenna on Facebook. I'm sure we'll share it on the Between Two Bridges stuff. So,
yeah, I mean, if you are listening to this, well, hopefully nothing changes and we can air this one, right?
Yeah, no, this is it. They're going to be done. It's signed into law. What we talked about is law as of January 4th or July 4th, 2025, and it's a lot of it's retroactive to January 1st of 25. So, it's going to be a challenge for accounting firms and payroll companies. So, it's going to be a fun time.
You know, with all this stuff, I pay attention to it because you'd be negligent not to.
Yep.
But most of the time I realize I still got to go to work on Monday.
Yeah.
Nothing's changing.
Listen, this bill is not going to change your life. Yeah. It's not going to.
Well, it's going to change lives for some people. You know what I mean? Like the people that lose their health care because of it and stuff like that. But I think that's excessive spending. I mean, we won't get too involved in that. That's personal opinion more than fact. But
yeah. I think that there's certain things that need to be reformed. There's a lot of people that are abusing the system, and it happens on both sides, and it's everywhere. And I don't know. I don't know. I'm a little bit disappointed in this bill. I feel like they could have, for the amount of money that they spent, they certainly could have done better with the cuts. I think.
We'll see. I mean, time will tell, just like anything else. But work your job, make your money, save your money.
Yeah, if you want to improve your life, don't wait for the government to do it for you. Just go out there and actually do it.
Well, they say that's the scariest sentence in the English world. I'm from the government and I'm here to help. Yeah. So, happy 4th. We're a little behind schedule here. So,
yeah.
Jerry had a birthday. Happy birthday,
I'm 41
Jerry.
41 now.
41.
Yep.
29 more years to go, huh? So, all right, well. Yep, I'm glad we got it updated and we won't look like assholes come Wednesday. So
yep, that's good. Now this is accurate information. So.
Yeah.
All right.
Thanks, guys.
Take it easy.
Thank you for listening to Between Two Bridges, a business-to-business podcast. Find and follow us on your preferred podcast streaming platform. like and subscribe, and leave us a rating and review. You can join us socially on Facebook, Instagram, TikTok, and X. You can email the show at info@betweentwobridgespodcast.com. Until next time, make it till you rake it.
That was a good one.